Nobody tells you this, but inflation doesn't just make things expensive. It silently decides who gets rich and who slowly falls behind. Right now, in 2026, that divide is getting wider than ever. The price of food, housing, energy, it keeps rising. But here's the scary part. Most people are trying to survive inflation using strategies that stopped working years ago. Savings accounts, fixed salaries, even safe investments. They're quietly losing value. But some people, they're doing the opposite. They're using inflation to their advantage. In this video, you'll discover the exact assets that are not just surviving inflation, but thriving because of it. And more importantly, why? Because once you understand the why, everything changes. Imagine this. Two people start with the same amount of money, same income, same lifestyle. 5 years later, one is struggling to keep up with rising costs. And the other, their wealth has doubled. Same world, same inflation, different assets. What's the difference? Let's break it down. First, we need to understand something most people ignore. Inflation is not just rising prices. It's the slow erosion of your purchasing power, meaning even if your bank balance stays the same, you're actually getting poorer. Think about it. In many countries, inflation averaged between 5% to 10% over the last few years. In some emerging markets, even higher. That means if your money is sitting idle, you're losing 5–10% every year silently. Now here's the twist. Inflation doesn't affect all assets equally. Some assets get destroyed by inflation. Others are powered by it. Let's talk about the first type of asset that actually benefits from inflation. Real estate. Not the way most people think. Everyone says buy property, but here's what they don't explain. Why does real estate perform well during inflation? Simple. Because when prices rise, construction costs rise. Materials, labor, land value. That makes existing properties more valuable. That's just one part. The real advantage. Rental income. As inflation increases, rent increases, meaning your income adjusts with inflation. Here's where things get interesting. If you bought that property using debt, you're in an even stronger position, because inflation reduces the real value of your debt. Let me explain. Imagine you took a loan 5 years ago. At that time, your monthly payment felt heavy, but today, because everything else became more expensive, that same payment feels smaller. You're paying back the loan with cheaper money. This is why wealthy investors love real estate during inflation. They use leverage and let inflation work for them. But here's the warning. Not all real estate is equal. Overpriced markets, low demand areas, or poor rental yield, they can still fail. The key is not just buying property. It's buying the right property. Now let's move to the second asset. This one might surprise you. Stocks. Stocks. Not all stocks. Here's the problem. During inflation, many companies struggle. Costs increase. Profit margins shrink. Weak businesses collapse. But strong companies, they do something powerful. They pass the cost to customers. Think about brands you use every day. Food companies, energy companies, tech giants. When their costs increase, they raise prices. And people still buy. That's pricing power. Companies with pricing power actually grow during inflation. Now here's the twist. In 2025–2026, something major happened. AI, automation, and digital infrastructure started boosting productivity, meaning some companies are growing faster, even in inflationary environments. The winners are companies that combine pricing power with innovation. But here's the mistake most people make. They invest blindly, without understanding the business. Without asking, can this company survive rising costs? Can it increase prices without losing customers? If the answer is no, it's not an inflation-proof stock. Now let's talk about an asset that's been debated for years. Gold. Everyone calls it a safe haven. But is it really? Here's the truth. Gold doesn't produce income. It doesn't grow like a business. Why does it rise during inflation? Because it holds value. When currencies lose trust, people move to something that cannot be printed. Gold becomes a store of value. And uncertain times that matters. But here's the twist. In recent years, gold has faced competition from something digital, something controversial, something many people still don't fully understand. Bitcoin. Now, before you react, let's break this down logically. Bitcoin has a fixed supply, only 21 million. No government can print more, and in a world where money supply keeps increasing, that scarcity becomes powerful. Now here's what's interesting. In 2024-2026, institutional adoption increased. Big companies, investment funds, even some governments started recognizing it. That changed the game. But this is important. Bitcoin is volatile, very volatile. So while it can protect against long-term inflation, it can drop sharply in the short term. Meaning, it's not for everyone, and definitely not something to go all in on. Now let's talk about something most people overlook completely. Skills. Yes, not physical, not digital assets. Your ability to earn. This is where things get serious. Because inflation doesn't just increase prices, it increases competition. If your income stays the same, you fall behind. But if your skills increase, your income can outpace inflation. Think about this. People in AI, tech, digital marketing, remote services, their incomes have grown significantly in the past few years. Why? Because demand increased. And supply is limited, so while others are struggling with rising costs, they're earning more. This is the most underrated inflation hedge, because no matter what happens, your skills go with you, across countries, across industries, across economic cycles. Now let's zoom out. Why is inflation happening in the first place? This is where most people stop thinking, but this is where everything becomes clear. Governments print money, central banks adjust interest rates. Global supply chains shift. Wars, energy crises, technological shifts, all of this affects inflation. In 2020-2022, massive stimulus was injected into the economy. Money supply increased rapidly. Then came supply shocks. Energy prices surged. Food supply chains were disrupted. And too much money, chasing too few goods. That's inflation. Now here's the part most people ignore. Inflation is not always bad. It benefits certain groups. Who benefits? Asset owners, business owners, debtors. Who loses? Savers, fixed income earners, people with no assets. So the real question is, which side are you on? Now let's talk about the consequences, because ignoring this is dangerous. If you keep your money in cash, you lose value every year. If your income doesn't grow, your lifestyle shrinks. If you delay investing, assets become more expensive. And over time, this creates a gap. Not just financially, but you start feeling stuck while others move ahead. But here's the good news. You can change this. It doesn't require millions, it requires strategy. Let's talk about practical steps. Step 1. Stop thinking of money as static. Money is not meant to sit. It's meant to move, invest, even small amounts. Consistency matters more than size. Step 2. Diversify across inflation-resistant assets. Real estate, quality stocks, commodities, or digital assets. And most importantly, your skills. Step 3. Increase your income streams. One income is risky in an inflationary world. Freelancing, online business, remote work. Find ways to earn more. Step 4. Understand debt. Not all debt is bad. Strategic debt used for assets can actually benefit from inflation. But reckless debt? That's a trap. Step 5. Stay informed. The world is changing fast. AI, global trade, monetary policies directly affect your money. Ignoring them is not an option anymore. Now let's talk about the future. This is where things get intense. Between 2026 and 2030, we are likely to see continued economic shifts. AI will reshape jobs. Some industries will explode, others will disappear. Digital assets may become more regulated, but also more accepted. Real estate markets may fluctuate, but demand will remain. And it's not going away completely. It may slow down. But the system itself depends on it, meaning you must adapt, not wait. Here's the opportunity. People who understand this early position themselves ahead. They buy assets when others hesitate. They invest when others fear. They learn when others complain. And years later, the difference becomes massive. So remember this, inflation is not your enemy. Ignoring it is. You don't need to predict the future perfectly. You just need to align with it. Choose assets that grow. Build skills that increase income. Think long-term. Because in the end, the goal is not just to survive inflation, it's to use it. If this video changed how you think about money, hit like. Some more deep insights like this. And tell me in the comments, which asset do you trust the most during inflation and why? Because your answer might shape someone else's future.